Welcome to my channel, everyone. Thanks for tuning into this video. And I'm going to go over in detail how to trade options on TD Ameritrade's ThinkorSwim platform. I'm going to break down all 7 of these points in depth, but very brief and straight to the point with no bullcrap. There's no need to overcomplicate the process. And by the end of this video, I'm really confident that all you are going to be ready to trade options on ThinkorSwim. But before we begin, all I could ask is if you learned anything from this video, if you could subscribe to my channel, like this video, and if you aren't already following my Instagram, I will link this in the description below. I post daily trading recaps along with some good trading and options tips and tricks. So without further ado, let's get right into the video. So I made a video a while ago on my channel about the PDT rule. And for those that aren't familiar with the PDT rule, it basically states that if you have under $25,000, you're going to be limited to taking 3 day trades in a 5 business day period. So with this, you have to be very selective on the 3 best stocks that you trade on a given period. So let's say you have $1,200 in your account on Monday. You make 2 trades that day on Monday. Now you only have 1 day trade left until the following Monday, which is 5 business days. Therefore, you could only make 1 trade for the rest of the week. Now this is with a margin account. So when you trade options, my best advice to do and give you all is to trade options on a cash account. With the cash account, there's no such thing as the pattern day trader rule. You can make a million trades in a day. As long as you use the cash in your account, you're not going to be flagged. So let's say you have a $1,000 account or $1,200 account in this case. You can make 5 trades on Monday, 3 trades on Tuesday, 3 trades on Wednesday. You know, you're over your 3 day or your 3 trade period. And you're not going to get flagged as a PDT because you're using a cash account. So everybody that wants to trade options, I would recommend using a cash account with 0 margin trading enabled at all. So for those that do not have a TD Ameritrade account already, you want to open up a new account in order to use ThinkorSwim and trade with TD Ameritrade as a broker. Now you have to select your account, and if you're an individual like myself, and I'm sure a majority of the people watching this video, you want to open up an individual account with only 1 owner. Hit open up an account, and then you're going to go through all your information. It's almost like an application you have to go through, put your financial information, sign a bunch of agreements, and then when you get to the screen where it asks you what type of account you're looking to open, you're basically looking to open up a non-professional, because as non-professionals, we can get all the exchange agreements and we can get level 2 data and all a bunch of other things for free because we are non-professionals. And now what's important here, and this is what I want you all to take away is when you are applying for options trading, you want to have a standard cash account. Make sure it's standard cash. I believe it's tier 2, because what standard cash is you're going to be allowed to basically long calls and long puts. If you are interested in selling options and writing options and doing types of spreads, then obviously this is not the case and you're going to be subject to PDT rule. But the way I trade options and the way I teach it in the course and on my YouTube is with a standard cash. We are longing calls and longing puts. And another key thing is you want to have margin trading. You want to have none. As soon as you have any type of margin on your account, you are going to be subject to PDT rule with under 25,000. And basically all margin lets you do is write options and do spreads and other, different types of option strategies. But like I said, that's not the case, and that's not what I personally do. So now once we got a TD account, we could download ThinkorSwim. And for those that have ThinkorSwim but want to learn how to trade options better, this is where you're going to begin. So on the top left of TOS, you're going to have a tab that says trade. And you want to hit that, and that's going to basically bring you up to the options chain, which is going to give you all the information on how to purchase these option contracts. Now, every contract is going to have an expiration date, which we see from the dates we have here. And the current date, which is tomorrow, October 9th, because options expire on Fridays. These are going to be the expiration dates of the contracts. And the number to the right of it is how many days until expiration. So today, the day I'm recording this video, is a Thursday. You have 1 because tomorrow these contracts expire. And then you have 8 for the following week's expiration because they expire in 8 days. So if we were to click these, it would bring us up something similar to this, where it would look like this. Now, personally, what I do is when it says strikes up here, I add 30 because it's going to give me a little wider of a range to look at the contracts. It's going to help me explain it a little better for all of you. So right here we have the left side, and on the left side we have calls. Now for those that do not know what calls are, it's basically a bullish position. When we want the underlying stock to increase in value, we want to buy a bullish position and we want to buy calls. On the opposite side we have puts, and puts are basically a bearish position when we want the underlying stock to decrease in value. So calls are bullish, puts are bearish. Obviously, calls options are going to have a bid and an ask spread because it's an instrument to trade, just like a stock, just like a future, just like any other open marketplace. And you have something now which is called strike price. Now, a lot of people that I know that trade options, they complicate this process. I just stick to very simple steps, which I'm going to explain. I have certain criteria that I look for, and there's no need to, go crazy with all the option terms, your Vegas, your strikes, your thetas, your gammas. I'm going to explain what I look for, and that is it. That's the only thing I care about, the only thing I look for when I'm putting on a trade. So right here we have the strike prices, and everybody freaks out a little bit once they see all these strikes. They're like, crap, which one should I buy? Am I buying the right one? I have a very good in-depth video, which is going to go way more in detail than this, on my YouTube channel. So I would recommend looking up strike price video under my name. But besides the point, I have three criteria what I look for. On the top left, we have layout up here. What I click is volume and open interest, and then I go back to it. I go to customize and I type something in called delta. And what delta is, it's going to give us a number, and what that number represents is for every dollar that the underlying stock increases or decreases in value, whatever our delta is, that's going to tell us how much our contracts on the option side are going to increase in value, with all other constants, remaining zero, because we have other Greeks that personally I do not focus on. So not including any other Greeks, if we were just to focus on the delta, and in this case we have a delta of 0.36 right here, for every dollar that Boeing increases in value, these contracts at 89 cents are going to increase in value. So let's just take a step back really fast and go over what these colors signify here. So everything black is basically out of the money, and it has zero intrinsic value. So by the time of expiration, these contracts that are still black and not inside the money are going to be worthless. They're going to be cost zero. Same thing on the put side. Everything out of the money in black is going to be worthless. And everything shaded purple is basically in the money. And what that means is by the time of expiration, these are going to have value, and these are going to be able to exercise, which people use as strategies for options trading. We are day traders. What I teach is about day trading. How I trade is about day trading. So we are not looking to exercise. We're not looking to hold into expiration. All we are looking for these option contracts to do is increase in value, as what a stock would do, as what a future would do, as what any other instrument we're trading would do. We can buy these contracts. So the 170 strike calls for 89 cents. We could purchase those for 89 cents. And for every contract we purchase, you have to times it by 100. So for one contract, it's going to cost us basically $89. And when people see that, one contract lets you control 100 shares, they freak out with that too. But like I said, we're day trading. We are using options as an instrument to just buy low and sell high. There's nothing stopping us from buying these at 89 cents. 5 minutes later, they go to $1.10 and we sell. That's how we make our money. We're not exercising. We're not controlling any shares. We're just using them as an instrument to buy low and sell high. So let's say we wanted to long Boeing inside demand because we're in a buy order imbalance and price tends to bounce out of demand zones. So at the time the market was open, we have heavy volume coming into demand. We're looking to purchase calls, and we all go to the option chain and we kind of freak out again. What contracts am I going to buy? The criteria that I look for is a delta of 0.30 and higher. What that tells me, like I explained before, is for every dollar that the underlying increases in value, our delta is going to tell us, with all constant other Greeks remaining zero, how much our premiums are going to go up. And then we want to see and purchase contracts that have volume and open interest. Volume obviously is how many contracts were traded today and the market's closed. So this 29,000 is the most. We want to see, there's no exact answer. We just want to see contracts that have decent volume. We don't want to trade contracts that have 5 volume today. And then we want to have contracts that have open interest. So what open interest tells us is how many contracts are open positions. Think about, the money we have in our pocket. Open interest is the positions the traders have in their portfolio and in their pocket. So open interest is going to tell us, these guys need to sell. That's going to cause liquidity in the market. So you want to see decent volume, decent open interest, and delta of at least 0.30 and above. That's going to tell us our contracts are liquid. We're going to have no problem getting in, no problem getting out, and we're not going to lose too much on high spreads because illiquid contracts basically have large spreads, and you're going to lose automatically just on slippage. When we want to buy these contracts, we have to click the contracts we're looking to purchase, and you want to make sure you click the ask. What the ask is going to bring up is basically your order entry tool, where you could edit your quantity. I could buy 5 contracts, I could buy 1 contract, I could buy 10, whatever. Your expiration, your strike, and the type of call or put, you don't have to touch because obviously we clicked the contract that we're looking to purchase. The only thing that you want to mess with if they have large spreads is your limit, the price you're looking to enter at. Then you could change your order if you want to do a market, a limit, and then everything else you could just leave alone. And when you're ready to purchase, you hit confirm and send. That's how you would normally purchase an option contract. Same thing for the put side. When you want to buy a bearish position on the options, we are not shorting calls. Instead, we're longing puts. You click the ask on the contracts you're looking to purchase, and you fix your order entry tool like that. Now, I have a little shortcut that we're going to use, which is an options trading trick to buy and sell these options on ThinkorSwim a little faster. So this is where I think ThinkorSwim stands out from trading options a little better than other brokers and other platforms, along with, a little slowish speed that sometimes we have on the platform as it lags. But let's say we want to purchase the contracts. I'm going to hit copy. So I'm going to right click the contracts and go to something that says copy. Now I'm going to go back to my chart and I'm going to hit Control plus V on my keyboard to send this to an option chart. So now we have Boeing's option chart, and this is going to show us a lot of things. Now there's another way to do it, which I have another video on my channel, but you could basically link this to something. You could go back to the trade tab, right click it, send to, and then send it to the linked color that you just linked, and now Boeing should be there. Now to trade the options a little faster, we're going to get rid of the chart on the right sidebar, and we're going to click something that's active trader, which is basically going to show us the depth of market. It's basically the level 2, the bid and the ask, but on a vertical axis. So now all we have to do to buy the contracts without going back and forth from the trade tab to your chart, back to the trade tab, is once we have the contract loaded up in our active trader, all we have to do is edit the quantity, and we could click whatever price we're looking to purchase these contracts at. Once you click it, I'm going to put auto send on just so there's no confirmation. Once you click it, it's basically going to put an order at that price. And once the market hits your order, basically a seller comes and hits that price at 0.75 where I just put my order, I'm going to get filled. How I know I'm going to be filled is it's going to tell me in the middle right here, it's going to show that I'm in, and up here net position is going to show 5 contracts that I'm in long, the 170 calls. Now a lot of people, again, for let's just a real example, let's say we're looking at long Boeing down here. They go to the option chain and they see all these and they freak out again. If you follow my criteria, you're going to be fine. I usually will play 1 out of the money, 2 out of the money, 3 out of the money. As long as it fits my 0.30 delta criteria, has volume and open interest, I have no problem playing those contracts. They're not going to really be any crazy different percent-wise or profit-wise than the one above it, the one below it. It's going to be in the ballpark area. Again, I don't play in the money, just a personal preference, because in the money contracts, if they do not move in your favor, they will go against you faster. So I usually stick to at the money, 1 out of the money, 2 out of the money, 3 out of the money, whatever the case may be, as long as it fits my criteria. So when I have the plan developing, so Boeing's coming down to 164, and at this point, obviously the market's closed, and we closed at 168, much higher. So at that time, the 165s were at the money. So more than likely, I would have played the 165s. So what I would have done is, once I saw Boeing coming into demand and I was ready to purchase the contracts with confirmation, most likely this candle right here, I would have had my contracts loaded up, the 165 calls, targeting the 167 area. I would have had it ready to go. I would have switched my quantity, and when I was ready to purchase, I would have just put an order on the market, waited for it to get filled, and then boom, I would have got filled. I would have had a nice runner, right up into supply. So this is just how to trade options on TOS, how to trade them a little faster. I did a little in-depth on the option chain, how options work, and basically my criteria. Hope this video wasn't too beginner friendly. I hope it helped people. I hope you learned something from it. Like I said, drop a like, comment, subscribe to my channel. I appreciate it.